Hi, my name is Noah Kolp, and I'm heading the Startup and Technology Banking Department at IDB Bank, Discount New York. As an Israeli-held bank, IDB Bank was always supporting Israeli startup with their banking and business needs, and now, after October 7th, even more. We are providing venture debt, among a lot of other services, and introductions with investors and VC, and always, as I said, supporting and standing beside Israeli startups at better time and at time that are not as good. I'm honored to host today two important investors and players within the Israeli American tech ecosystem, Eyal Bino, the founding partner of 97212, and Daniel Frankenstein, founder and partner at Jewel Ventures. Hi, Eyal. Hi, Daniel. We're about to discuss the investment environment for Israeli startups, noting that global venture dollar volume decreased significantly the past 2 years. And my first question is to you, Eyal. Startup leaders who have founded their businesses in Israel find investment and growth even more complicated with the onset of the war. What do Israeli founders need to anticipate right now when seeking fundraising?
Hi, everyone. Good afternoon. Eyal, 97212 Ventures, which is a combo of 972 Israel, 212 New York, for those of you who are trying to figure out the numbers. No, I think what's really interesting in this time is that Israeli founders have dealt with global, I don't want to say crisis, but definitely a global challenge with interest rates going up and typically kind of a slower pace of investment. You had the judicial reform in 23 and the war that started after October 7th. It created a lot of challenges for Israeli founders, because their teams were a lot more slim because of the many of the employees have gone on reserve. And then on top of that, I think Israeli funds have found a challenge of raising their next fund because of the challenging environment. So kind of a slower pace of investment. So I think what a lot of our portfolio companies have tried to do is focus on trying to get more customers, trying to get more partners, trying to get more revenue. Because if in 2021 you needed $1 million in ARR to raise the next round or go to Series A, now the number is probably 2 million and sometimes 3 million depending on the space. So I think a lot of what we told our companies is to focus on traction, on more innovation, and go to market to raise when the time is right.
Daniel, Israel's economy and technology sectors overall have proven themselves to be resilient time and again. What do you feel VC sentiment is right now in investing in Israeli tech, trying to help your portfolio company raising funds these days?
Yeah, no, it's a great question, and thanks for having me. Good to see everybody. Even good to see everybody in the back having coffee and borekas. Save me a mushroom one, please. Great to be here, and I love all the support for the Israeli tech ecosystem. I think it continues to prove why it's so resilient. Listen, I think you have to take into context the global venture reset as you think about what's happening in Israel specifically. This is not like a circumstance where the entire global venture world is hot and on fire and everyone's running to invest in deals.
Environment is gloomy regardless the war in Israel.
Exactly. The world of venture is a bit gloomy right now globally, and that has nothing to do with Israel. But I think Israel continues to track the rest of the world. It continues to attract capital, obviously less than before, but the world is down, like less than before.
So 2021, 2022 is not here to come back.
Correct. Those were aberrations. Those were crazy distortions of the environment. And by the way, now's a bit of a distortion as well on the downside. And one of our jobs as venture investors is to look at these distortions, look at these macro environments and say, what can we do to take advantage of these circumstances? So at my firm in 2021, we looked at the world and said, this is not sustainable. We're going to be sellers. We're going to be sellers. We're not paying some of these prices. Now, with the global venture reset and specifically some of the challenges unique in Israel, we're as aggressive on the buy side as we've ever been.
We're heading into 2025 with what appears to be stabilizing interest rates and a soft landing for inflation. Eyal, what do you think comes next for VC investments and startups in accordance?
I think we need to see liquidity in the market. One of the things that a lot of funds have anticipated for 24 was that we're going to have, at some point, IPOs, at some point, some more M&As. And in Israel, we actually see a lot of M&As, especially on the cyber side, compared to other countries. But I think what we're going to see in 25 is, I think, finally kind of the end of like the cleaning phase of venture. I'm optimistic that I think a lot of the companies are going to have an easier time getting funded. More IPOs mean more funds able to raise capital, as long as they have a good performance. So I think a lot of VCs and a lot of fellow investors, I think, are expecting 25 to be a year of transition when we kind of flip the switch and kind of turn the page on 2023 and 2024.
Daniel, what do you believe will move the needle on VC investing attitude?
So I think, VCs are investing the capital that they have to raise from LPs. And I think there's a lot of LPs that are waiting for some liquidity. And they're waiting for that liquidity that they can put into managers that they like and trust.
So it's macroeconomics, rates?
I think it's largely whether or not this overhang from, so maybe let me zoom out and say that, typical VC fund cycles is 2 to 3 years. VCs raise, a new fund every, say, 3 years. In 2020, 21, 22, that was down to 12 or 18 months. So these typical VC investors were putting out a lot more capital a lot quicker, and they're waiting for a lot of that to come back. I do think, and I don't want to be too pessimistic, but this is a global sentiment, not an Israeli-specific sentiment. I do think there's going to be a bit of a, I wouldn't call it mass casualty, but I would say that there are definitely going to be some venture firms that got a little over their skis that are going to be taken down. But I also think there's a new generation of venture firms that are going to really flourish in this environment. And there's incredible opportunity right now. I mean, I am seeing some of the best, and we only focus on Israeli-founded businesses. So when I talk about what I'm seeing, that is very much a specific lens to Israel. I'm seeing some of the best deals at the best pricing that already have global customer traction than I've seen in my career. And I've been doing this, 14, 15 years now. So I think where there is great opportunity, there will be investors to invest in those opportunities. I agree with Eyal that I think this next year is going to be probably better than the past couple of years, because I do think all of this is now priced into the system, right? People understand
so it's an adjustment.
It's an adjustment. It's a new normal. It's a new normal. And let me also say,
unless you're doing something in AI, which is 3x what everybody else gets.
So there will always be areas like cyber, like AI, that are the talk of the town and will get funded sort of in any way, in any form. We tend to stay out of those areas in general because they tend to be...
Because the hype is not necessarily what's going to determine if an investment is good or not.
Exactly. And when you can't get something at the right price at an early stage, it's really hard to make that work. And we also have to recognize at the end of the day, we're in the financial services business. It's dollars in and dollars out. It's not what cool company you can talk about at a fun event, right? It is a financial service.
Game,
it's very much a numbers game. But I agree with Eyal that I think next year is going to be pretty interesting. And let me maybe say this, not every company that got funded a few years ago should get funding now. Not every startup is meant to succeed. And I think we lost some of that art in the last macro cycle where everything was getting funded. And I think we're now back to a new normal, which I think is healthy for the system. It's healthy for investors. It's healthy for companies. Great entrepreneurs, if something's not working, should move on to do something else. So I actually think we're in a healthier environment.
I'm going to ask the same questions for both of you, and we were asked to be considerate of the time, so this is the last question, Eyal and Daniel. Just to dive a little bit deeper into the Israeli ecosystem and the challenges it faces these days, what would be a good advice for you for a founder, entrepreneur, a CEO of a startup looking to raise funds right now. Again, taking into account the fact that this is, I don't want to say a crisis, but this is like a global situation where things are not the most beautiful ever for tech. What would be your advice for companies that are looking and got to a situation where they need to raise funds?
You know, I would give this advice to an Israeli entrepreneur. I'd give it to an American entrepreneur as well. And I would say, focus on your metrics. Focus on the business itself. You know, we have really spent the last year and a half focused with our portfolio saying, tune out the noise, go and close customers. Close customers, build up that annually recurring revenue number, build up that profit margin, show us that you're a real company deserving of financing, and then go out and raise capital. So the bars are higher now. To raise a Series A, it's no longer,
less
a half
fluff and real work and
less
numbers.
exactly. Real business for real customers at a real margin. I know it sounds completely crazy that you're going to build a real company that can make money, but we always say we invest in real companies, not hype cycles. And so the advice I'm giving to every entrepreneur is focus on your metrics. Focus on bringing good products to market that you can deliver to real customers at a margin, and everything else takes care of itself.
I totally agree. I think I'm going to add two more things. One is be in the market. If you cannot be fully based in New York, use, restart Israel as a way to connect with more investors. So I think that's great that there's so many investors here looking for great companies and great founders. I think the other piece is try to look at what works and what doesn't work, and pivot as quickly as you can if you need to. We had a company, one of our portfolio companies, that were just going, it was kind of a slow death. And I think they realized they have to pivot the company. They came up with a new product that within 6 months got probably $3 million in revenue. And of course now, VCs are standing in line to fund the company. So those are the kind of things that you have to be, I think, very agile, which is, I think, is an Israeli trait to begin with. So overall, very optimistic view.
Daniel Frankenstein, the founder and partner at Jewel Ventures, and Eyal Bino, the founding partner at 97212. Thank you so much, and thank you
very
for
much.
listening.